Hello, everyone. Today I'm going to be discussing what a tender offer is. So, with all the recent news about Elon Musk basically getting denied purchasing Twitter by the board of directors, there have been some hints that he might try and go over through a tender offer to purchase those shares. So, I'm going to be going over exactly kind of what that means. So, a tender offer is a proposal that an investor or a group of investors or a company makes to buy shares directly from the stockholders of a public company. So, in this case, the investor or the person trying to acquire a company or buy the shares will attempt to buy all the shares of a company or some shares. Typically, the investor will want to purchase more than 50% so that they do have controlling interest. So, not all times are they going to try and buy all shares of a company, but usually they try and hit that 50% threshold so that they can make those large business decisions for themselves because they would be in a majority controlling interest position in that case. So the investor will offer to buy the shares at a premium to market value most of the time when they go for a tender offer. So this is because it's more tempting for shareholders to sell. So just a really basic example, if the stock price is currently at $10, maybe the investor will offer $13 to shareholders, giving them a 3% premium value over what the market would have given them if they sold at that time. So this would be tempting for a lot of investors to say, sure, yeah, I'll sell to you if you're giving me $3 more than the current market offers. So that's what the investor who's trying to acquire a company will often do. They'll put a premium above the price of that current market value of the stock so that they will likely tempt more shareholders to accept the tender offer. And then finally, if enough shareholders do accept that tender offer, and then it goes through all the regulations, it gets approved. A lot of the shareholders would be forced to sell the stock even if they don't want to. So if a large majority of the shareholders accept the tender offer, then instead of some shareholders who decline just still keeping their shares, they would be forced in that position a lot of times to sell the shares to that investor. So for someone who doesn't want to sell their shares, they're kind of out of luck in that situation. But like I said, since almost always it's going to be at a pretty hefty premium, they still will have made more money than if they sold it at market value, even if they didn't want to sell those shares to begin with. But yeah, it'll be definitely interesting. I'm filming this on the 24th of April to see what happens with this Twitter thing and if Elon does try and go for a tender offer. But I guess we'll just have to wait and see how everything plays out. But anyways, thanks for watching and I hope you enjoyed.